Good morning. It is a Saturday, the 7th of March, and today what we're doing is doing a trade review on Thursday's trading, the 5th of March. And yeah, today's a good morning indeed. It is a Saturday. It is a Saturday, and yeah, it's my 2-day break. It's a weekend. Yeah, it's a weekend. It's a break from school, from all the stress and everything else. School is it's a lot of stress, especially when you're in grade 12. I think it's a lot of pressure, and I think you do need longer breaks. I don't think 2 days is enough. And yeah, so this is my break, and this is what I'm doing with my break today. I'm sitting here with you guys today, and I will be giving you a trade review on Thursday's trading. So what a weekend, right? Yeah, I love what I do. Whenever I get time to do this, sit in front of you, sit in front of these charts, and do trade reviews, it really satisfies me. I just feel like I've accomplished a lot that day, during that day. I just feel like I've accomplished a lot. At the end of the day, I just reflect on the things I did, and this is like one of the things I love doing, and I feel accomplished and satisfied with my day. And so yeah, man, let's get to it. Today is a trade review on 5th of March, as I said. This was a regular trading session trade. This was taken during the time period of 9:30, between the time period of 9:30 till 16:14 Eastern time. So that time range is called a regular trading session, right? Let's just understand that first. So I don't want to get you tripped up using the terms regular trading hours. So as today, fourth on, the regular trading hour is a time range from 9:30 till 16:14 p.m. Eastern time. And I hope you understand that. It's really easy. Okay, yes, I took the trade, regular trading, yes. But what was the whole context behind that trade? Well, I kind of built this thesis. Well, not thesis, but what can I say? I came upon this trade before the market even opened. If you can look from the time range of 9:30 till 7 o'clock, look back 9:30, what has been transpiring during that time? Well, we have been expanding lower. We've been seeing lower prices. But in the way they did it is, it was kind of like, it wasn't a straight shot down to discount, but they took his time. They played inside ranges, they accumulated, when I say they, that I'm talking about the algorithms. I'm talking about the smart money, the hierarchies that contribute to the way price delivers. So don't get confused here. Don't get flustered with the word they. When I mean they, I mean the algorithms, the institutions, and all the other guys, all big money, putting money in this markets, right? The guys who have influence on how price reacts. So what's going on here during that pre-market session is we were gravitating lower, right? And in the way they did it, it was a really not a straight shot down to that daily SEBI discount. They really took their time. It was kind of like a time distortion. But the question is, why do we take it down to discount? What was it doing? Well, I can tell you this. We were building price at a discount. Price was accumulating discount prices. So as it was going down, coming back up, giving us these ranges, that's price accumulating what? It's accumulating sell stops, right? It's accumulating orders on the downside. That's smart money doing that. All the big money, they're taking up all those orders, accumulating them, taking price down, taking it up, taking it down, with all these pullbacks coming down, accumulating it. That's orders being, accumulated in the marketplace, being gathered, being collected. so that when 9:30 hits, when price is at a discount and it's cheap, discount means cheap, it is reasonable at that moment that smart money would decide to buy it. What is that discount though? What's that discount price? Well, it's the daily SIBI. It's the rectangle that's shaded in green with the quadrants on it, the blue lines. That's what they were building it down to. That was our discount. And so at that particular area in time when we're inside that daily SIBI, you would expect some level of discount sensitivity. Meaning now you would expect early signs of reversals. So at this time I'm watching price and I'm thinking, I want to buy this. I want to buy it. I had already bought it the first time. I got stopped out. I bought it inside the daily SIBI. I got stopped out. That wasn't a good trade. Right, okay, but the idea hasn't changed yet. The logic hasn't changed. I'm still expecting higher prices. I just entered at the wrong time. Okay, now 9:15. They offered me this trade setup. Price trades down to the low quadrant of that daily SIBI. It gives me a inversion fair value gap. They support offered and the order block. So I'm looking at this, I'm kind of skeptical, because I took a trade and I got stopped out on that one, and that was a very demoralizing trade. So now I'm kind of skeptical whether to take this trade or not. And in me being skeptical and taking my time, before you know it, it's 9:30 and boom, it plummets up higher. Next thing you're like 90, 50 handles up. And so at this point, I can't do anything really. I have to wait for another opportunity. And so obviously it does its thing. They drag it higher to this first presented fair value gap at pre-market session. That red rectangle that's shaded in red, that's the pre-market session first presented fair value gap. So that was the first presented fair value gap after 7 o'clock. So immediately after 7 o'clock, you would look for a displacement in price that comes with a fair value gap. So that's exactly what you're seeing there. That's the displacement that came with the fair value gap. So that becomes our first presented fair value gap. And that gap becomes salient onwards during that session of the regular trading. Because the price, the algorithms are going to refer to that. Yeah, okay. With that in mind, price trades up into it, 9:30 opens up, it's the opening range gap. The opening range, excuse me. We trade into that first presented fair value gap. What did they do? They reject offered, right? We also inside of a PD array. It's a new week opening gap. We're inside a large black hole, which is a new week opening gap. And in the way this would work in our buys, the way this new week opening gap would align with our buys is that the quadrants that we have with this gap, the upper quadrant, the lower quadrant, the consequent encroachment, the lows and the highs of that gap, they shouldn't reject effort. Price shouldn't reject all of those quadrants. If it is rejecting, it needs to reject down to a certain level, which is the new week opening gap low, which is what exactly they did there. They supported off the new week opening gap low. So my trade was based on the fact that price pierced the new week opening gap low, right, at 9:45. I don't know if you're following along with me, right? That's the time I took the trade. It's currently 9:46. Price trades down to the new week opening gap low. It supports, it closed, it pierced it a little bit, it gone through it, crossed over it, and it was below it. So when the candle was forming, it was kind of like below it. But as it came back up and it closed back inside of the range. What does that tell you? What does that tell you about price? Well, that's a signature that price is likely going to support of this low. There's some state, it's probably going to use this as some level of support. If you look to your right hand side, there is no fair value gaps. We don't have any bessies or anything like that to refer to. So the only thing that I can use at this moment is this new week opening gap low. That's literally all my trade is based on. So I seen this and I'm like, okay, boom. I want to see higher prices, right? Now that it's doing this, I think this is a perfect opportunity for me to take longs, and so I do. I take longs right here. So this is the position I'm in right now. I'm buying 5 contracts. My stop is set right at the low where it pierced the new week opening up low. So I'm on the 50-minute time frame, trying to get the full perspective of what's going on. Where's the orders resting at, the buy stops, or what I can target. And so I'm targeting these relative equal highs, buy side liquidity. On electronic trading hours, you wouldn't see that clearly. You would think it's already been taken out. But if you can go to NQ futures, you would notice that on the regular trading hour, price hasn't traded up into that. In fact, there's a large black hole. Or not black hole, but there's a ton of liquidity pool resting above those highs. It hasn't been taken out. And so in a moment, I'll be going to the futures chart of NQ, then I'll show you what I'm talking about and you see it clearly. So I'm not just yapping here. Yeah, I don't confuse you. Notice how we're inside of that first presented fair value gap, that pre-market session. Just note that, just see it, watch that. So those are those smooth relative equal highs. The buy side liquidity. That's what I'm aiming for. That's my terminus point. And so I'm going on to the NQ futures chart right now. There's those relative equal highs right there with the blue line, excuse me. Notice how price hasn't traded up into it, traded above it. That's the regular trading hour session. It hasn't done that yet, so that's my target. You see that? That's the one right there. Too smooth for comfort. So now we're currently above that pre-market session first presented fair value gap, and I'm expecting it to reclaim its role as a bussy. So the original characteristic of this gap was buy side imbalance, sell side inefficiency. So it's a gap you would expect price to balance its sell side inefficiency and support off it. So that was the idea of this, for price to reclaim its role in support of that gap. So now I'm currently buying 1 contract. I'm adding a contract based on the notion that there's a fair value gap. You're supporting off a bussy. I've just drawn out its consequent encroachment and it's staying above it. So that's the signature of price being, reluctant in its sell side. Basically, it means that price is prone to go up higher. So I'm buying 1 contract. I'm adding partials on that trade. And so boom, it reacts off that. You see that? Right there. Those are my executions. Those are my fills. And that's one of the trades I also took where I got stopped out. I was trying to buy the first presented fair value gap after the opening range. Yeah, that they denied me. They denied me. So now at this point, I'm thinking of adding 1 contract again. Once it reclaims that bussy, that red shaded rectangle right there. You see that? You see how it's above it right now? Now I'm expecting it to gravitate low and support off right off it, staying in the upper half. At the same time, trading down to that order block, that down close candle that's overlapping that first presented fair value. That's an order block. That's a bullish order block. So it should support off. I did make the mistake of annotating it as a bullish inversion fair value gap, which it was not. So excuse me for that. I wasn't wary of that. So now I've just trailed my stop to profit to cover costs. One thing you should notice also about what time it is right now, it's currently macro time, 9:52, and it's into macro. And so we know that macro time usually does these things of, expansions when price is predisposed to do a certain thing, which is in this case to go up high, take out buy side liquidity. That macro time is going to yield for price to expand lower and it's so high prices. So that's exactly what it's doing. It's operating under those underlying factors, that macro time. So now I've currently added one contract right off the volume imbalance. It's a really tiny volume imbalance. It's so located exactly at the high, right there. That's my execution. So I currently got my shorts in, my longs in, excuse me. That was that order block I was talking about. Once again, execution. That was my fill right there. Trying to time the volume imbalance. So as it goes down into it, I'm trying to enter on it. So I do get filled, but let's say maybe one handle above that volume imbalance, which is totally fine. It's totally fine. The spreads on this thing are not so wild, but yeah. So this is called pyramiding. I don't know if you know this, but it's a very salient thing when it comes to taking a trade and you trying to add on that trade. You wanna concept of pyramiding a position is, you know how pyramids are built, right? Their foundation is built on a very large surface, right? To, you know, it's a base. It's very large. It should support the other pyramids. I don't know how to explain this. Yeah, so the whole concept of pyramiding a position is based on on your first position. The biggest position needs to be your first, which is exactly what I did. When I took this position first, my first trade was with 5 contracts. And then when I added onto the trade, I added 2 contracts. Notice I didn't add the exact same 5 contracts as I did at first. I didn't add anything more than 5 contracts. What I did instead, I decreased my leverage. I used 2 contracts. What does that prevent? Well, it prevents the underlying factor that when you enter a trade with the highest leverage possible on your worst entry at a higher price, at a very unfavorable price, once price goes against you, you're going to incur a very large loss. And that's something you don't want to do. Whereas if you had a position that was worth a large sum, let's say you took 5 contracts like I did on your first trade, and the trade goes into profit, you're making profits, big profits. So now I've moved my stop loss once again to that high, I mean to the low of that the previous low. The low that's supported off the order block and the reclaimed fair value gap. So that's where I'm trading my stop to. And I've also taken on one contract. At this point, I've taken out one contract just to cover costs, commissions, and all those things. And oh yeah, this is a demo account. I don't want to throw you guys off. I am trading on a demo account. This is a simulated account. It's nothing real. This is not real money. This $500. That's not real. I use this as a means of practicing, refining my skill. So I'm not trying to mislead anyone here. I could care less about the profits that I'm making right now because it's not real. And I expect the same for you. I don't expect you to look at that and be like, whoa, this dude is making $700. I think I should be making. No, I don't want you to think that way. What you should be focusing on is the way I'm taking these trades, the foundation that these trades are built on, the logic that these trades are built on. I think that's one thing people need to focus on. Be insensitive to the profits, because that at this point, at this stage in your trading, yeah, you're probably learning as well. You're probably learning trading, just trying to figure out what trading is. The last thing you want to focus on is the profits right now. You want to build a base of an understanding of how markets move, the cycles, and everything. You understand what I'm saying? So yeah. So now at this point is really close to my TP. It's really close to my TP at this point, and unfortunately, to break it to you, but it doesn't end up hitting my TP, my target profit. But what it does take out is the Asian session highs. That's something I did not annotate. So you can't really see it on the chart because I didn't annotate it. So what it's doing now, it has just taken up Asian session high, and that was the turning point. And I did get stopped out on a trail stop. I made profits. It's a good thing to be able to protect yourself. That's the salient thing about stop losses is you need to trail your stop loss as tight as you can, especially when your TP is about to get hit. You don't want to you don't want to trade to go against you. Maybe when you were like one handle away from your TP and reverse on you all the way down to stop loss that's in like below where you entered. Then you end up taking losses when you could have trailed it Man, you could have prevented all that. I don't know what's going on with my speech today. Excuse me. It's really bit slurred. I don't know what's going on. But I hope you guys do understand what I'm saying. Yeah? I hope you do understand the concepts that I'm using here. Because I think they're really precise, and I think everybody should be doing this, man. Everybody should be, you know, have this type of knowledge. This is the type of shit that can make you millions, bro. Millions of dollars. Calling out market moves before they even happen, taking trades, literally selling the highs and buying the lows. I'm literally doing this right in front of you. Isn't that impressive, bro? Like, what more do you want at this point? What more can you ask for? So, so that red line that I just graded right there, that was consequent encroachment of that wick, that discount wick. So the logic behind that is that prices stay above it, signature of being relatively strong and still wanting to gravitate to that buy side liquidity is if price stays above that consequent encroachment of that premium wick. However, if it does close above it, below it, then I probably run the risk of getting stopped out on a trail stop, which it eventually does stop me out. And so those were the signatures signs. So those are the Asian highs right there. So he had just taken those out, and that was like the turning point, and I got stopped out. So at this point, I've just submitted to the fact that I'll probably get stopped out now. Now that it goes below that consequent encroachment, it just confirmed to me that, yeah, at this point, it's weak, and yeah, I'm probably gonna get stopped out. And so I've already settled with that idea. I didn't get the precision that I wanted, but I did make some profit. I made about 90 handles. That's a lot. That's a lot. 90 handles. That's more than anybody else makes on a daily basis. A lot. So yeah, that was the trade. That was it. I think that was a really great trade. Yeah, man. It means a lot, man. I've got a lot to offer. I've got a lot that I know that I just want to spread out there. It's one of the reasons why I started this channel is to spread the knowledge, to spread the truth. Because there's a lot of fucking jokers out there who teach a lot of crap, nonsense. Yeah, like pretending, acting, and displaying all these fake lifestyles. Those guys, they don't know the first thing about trading. And I really hate seeing these type of content, enforcing the idea of getting rich, making millions, and all that bullshit. So the reason why I started this channel is because I just want to expose the type of industry. So yeah, thanks, man. It was great. It was a great time.